We tried to sell off. We tried to collapse with equities. It didn't happen. Now we're back above all-time highs. Equities have still not reclaimed their all-time highs. And people are starting to realize Trump is in power for 4 years. He has repeatedly done things that are good for Bitcoin. Maybe we should stop fighting that trend.
This episode is brought to you by Kraken OTC. Get access to 24/7 trading services for high net worth individuals and institutional clients to execute orders over $50,000. You'll hear more about them later in the show. As always, investments in blockchain technology involve risk, terms, and conditions apply.
Welcome back, everyone, to another 1000X podcast. It has been an eventful week. But Jonah, I hope you had a good Memorial Day weekend. Maybe you got a little bit of time off, time to chill. Maybe not.
It was fun. I went to a party at an undisclosed location that was awesome. It's good to see you, Avi.
I've heard similar things, that this party was good, by the way.
The party was pretty crazy. What a fun time. Yeah, I'm feeling good. I'm feeling refreshed. I'm feeling like I lost a few brain cells, but no worse for the wear. I feel like I should be more euphoric about crypto. The whole space is like, if you had told everybody 3 years ago that we'd be trading 110,000 with like mainstream institutional adoption, the president, like basically the president of the United States, like personally setting aside a few yards worth of fiat to go and lift Bitcoin, I would have thought we'd be in pure euphoria mode, CME basis at 30% positive. Like I would have assumed that things would be just like peak froth, but everybody just seems kind of chilled out. Alt season is back. I don't know. I want to get your take on this, Avi. I'm kind of amazed by how cool and collected everybody is, including that trader who put on $1 billion worth of notional with 20x leverage on, I believe it was Hyperliquid. Lots going on.
Yeah, it's honestly, it's amazing. And I think the broader mentality is that, oh wow, like I should have made a lot more money. And I think that comes from the fact that returns are just naturally going to come down in an industry that grows. Like if you think about it, basically every other time Bitcoin hit all-time highs, everyone had 5 to 10x their entire stack. And because alts just like pulled ridiculous moves. Like if you go back and you look at the moves in 2021, or even like look at the moves in from end of 23 to April of 24, like everything 5x'd. It was insane. Sometimes things would 50x. You had, in 21, you had Luna like 100x. It was like a 300x from low to highs. Now the low to highs, like the absolute pico low to the absolute pico high on basically anything that exists, is 10x. And that's like one asset. That's one asset. It's like Hyperliquid, right? Hyperliquid it starts at 3 and goes to 40. And that's like the only asset. Right. So you kind of you had to be good to actually get those kind of returns this cycle. And not only good, you had to be a little bit stupid, right? Like nobody's going to take their entire net worth and put it into one asset. That just seems wrong. And so I think basically people are just reacting to the fact that, yeah, look, I made some money, but I didn't make insane money. And to that I say, it's okay. You made some money. Like, this is not really a get rich quick industry in the same way that it was in 2021. It's still get rich quicker than every other thing that exists on the planet. But it's obviously a lot bigger today. So it's not going to be as easy to go from having $10,000 to 5 million as it was in 2021. Like that, those days are very much so behind us.
Yes.
Unless you like somehow manage to pick the right meme coin right as it comes out, and you put a lot, you like put a lot of money into it. I mean, obviously there's still ways, which I think that's what attracts people, right? Like there's still every now and then you hear about a coin that pulls a 200x, and you're like, oh man, that's pretty fun. But they're rare, and like 4 years ago they were much less rare.
I mean,
and they're widespread.
Yeah, you didn't have to be smart. You just had to do something, and you could have hit a 10 bagger without trying too hard back in 2020. Like if you bought altcoins during COVID, you were rewarded handsomely for that. Right now, I mean, okay, so the famous quote is, somebody asked Warren Buffett, "What's your secret?" And he said, "Nobody likes to get rich slow. So that's what I've focused on." And he's kind of right. Like it pays real dividends to invest in a career, invest in good things for the long run, try to avoid the pitfalls of trying to 10x your money in a short period of time, because that, obviously statistically works out badly for you most of the time. You said it best on, I can't remember whether it was like 2 or 3 weeks ago, you said that crypto is in its post.com crash moment. And so now we're in the early innings of what I think is like a 25-year golden bull run super cycle for crypto. But that, if you just use, continue with the tech analogy, that golden 20-year bull run from whatever it was, 02 or 03 until, basically now, it didn't like offer you a lot of 1000x in a 2-month kind of opportunities, right? It was more just like all right, I'm just going to ride this mega trend, just stand on my surfboard while this wave takes me wherever it's going to go. And we're kind of there in crypto, right? Like we established that only the good businesses will survive. It's distracting to look at all of the random crap that's going up quickly right now. But, I do believe that if you stick around in things that still are valued fairly on a PE ratio basis, like Hyperliquid, like Maple, even things that you can't value on a PE basis like Bitcoin, I think will probably 10x over the long run. So just have to sit there. And I think our space is a little too degenerate and impatient for that. But if you compare it to, like you just said, anything else, equities, bonds, like what else are you going to invest in right now? Nothing. So I think there's kind of this opportunity to just be a disciplined investor, earn your money however you earn it, dollar cost average into crypto, into Bitcoin, and a couple of select altcoins that actually are real businesses with real products, and within those ecosystems, try to stack more of that token. And I think you're good doing that. That's what I'm trying to do anyway.
And some of the picks that we've been looking at have been doing very well. Obviously, we mentioned Hype a lot, but Syrup is still crushing it.
Yep.
Very, very, very happy to see that now like at 43 cents.
Mm-hmm.
We started shilling this thing, not shilling, but talking about how we like it.
We have a disclaimer now. We have a disclaimer now.
We do have a disclaimer. We have a disclaimer. Nothing here is financial advice.
Yeah. I think they're going to patch it in. But yeah, sorry, go on. We were not shilling Syrup.
We're not shilling Syrup. What I was saying is, just we were trying to look at, okay, well, what is actually making money? And the stuff that's making money is, doing reasonably well. Although one area that we're seeing a renaissance in right now, we're seeing a lot of AI coins do extremely well. Virtuals specifically is really crushing it, Jonah. I don't know if you have a take there. Like what's going on with virtuals? We launched on virtuals. We like virtuals, but it's just up in a straight line.
Yeah. So my take on virtuals is I wish that they had marketed themselves as a launch pad that gives trading fees to the creators that launch on their site. If it was just that simple, like launch your token here and collect a fair price from trading activity, I think virtuals would be higher than it is today. They marketed themselves as a no-code AI agent, ecosystem, launchpad, whatever, and their no-code AI agents are just not good enough, right? Not even close. Not even 1% as good as they need to be to attract an audience. So in that sense, that like making that feature the key product, I think was a mistake for them, but they may successfully pivot away from that. Right? Like I do believe that AI mania is coming to crypto. I think that we're just seeing the beginnings of it. Asset allocation is something that I struggle with within the AI space, within crypto. So basically what I'm kind of working on is trying to make our agent and our agent's ecosystem as good as it can be and have that be my exposure to it. Because I don't know how to trade the rest of it as well. We own our L's on this podcast, and I've certainly screwed up some AI investing in crypto publicly here. Like you don't win them all. So I don't really know. I don't know what you call an AI coin. These aren't real businesses yet, but we know the mania is coming. So you're probably okay if you're exposed to some of it, right? Are you supposed to buy Zuri Bro or Virtuals or AI16Z or Fartcoin? Like I have no idea. I think you're probably just supposed to have some skin in all of those coins and probably end up hitting a 10 bagger somewhere. What do you think? I don't know. Help me. Like, what do we do here?
I think that's fair. I mean, a lot of these things, I think Tao is a great example of this. A lot of these things kind of start with vaporware and trumpet and tell you about how amazing they are. But then you look at them and you're like, oh my God, there's like literally nothing here. What the hell are you guys talking about? And then suddenly, because they're comprised of smart people with, a vision, they actually manage to deliver.
Yep.
And that's kind of what is like slowly happening with Tao. I mean, Tao has definitely underperformed over the last 2 weeks. I think it just because it had so much incredible
overperformed.
Yeah. Because it overperformed, and then I kind of think it reached sort of fair-ish value for the developments that it's made. I mean, if you look at all the subnets, it's like still, a huge portion of activity is concentrated on the staking subnet. It's like most of the economic activity is concentrated there still. And so, you have to watch for it to grow its other subnets. But at least that like level of economic activity that came and the promise that came with, I'm like, wow, these subnets are going live. There are some interesting ones, even though they're not making a ton of money right now. It's like, okay, let's reprice this thing. I think you kind of have to watch for. You have to watch for this across the board. I mean, basically, who is now actually delivering even a little bit, and you probably get 3 to 4 weeks of reasonable outperformance, right?
Yeah,
and that's what I'm trying to screen for is, and you saw this with Maple as well, right? Once TVL starts going up in a straight line, oh wow, price follows. You see this with Pendle too. So I mean, my take right now is, hey, let me find who's just starting to deliver value that could potentially grow. Try to make some bets, because one thing we haven't really talked about is, okay, broader markets. What do we think about Bitcoin? What do we think about Ethereum? And to be completely honest, I don't have a day-to-day direction on these things. I don't know if tomorrow we're going to be 115,000 or tomorrow we're going to be 105,000. But what I do know is that we now have some semblance of stability, which is going to give people, the confidence to go bet on altcoins. And why do I say this? Well, Bitcoin has been above $100,000 for almost a month now. And $100,000 is still like a pretty psychologically significant level. I think as long as it stays above that level, people are going to be willing to speculate in these types of alts. Even if Bitcoin sells off from 109,000 to 5% down to 104,000, still above 100,000. And I think it doesn't, damage the confidence that people have in the market right now. Additionally, equity markets this morning, they shrugged off all of the tariff nonsense. Trump once again had delayed imposing tariffs. Maybe we can negotiate, right? So I think what the market is telling you right now is, hey, we're not so concerned with everything falling apart, and so therefore we can actually go speculate on things.
Yeah,
and that's what we're seeing. And so I think we probably have another, maybe another week or two of this before, either before it gets extended by Bitcoin going to 120,000, which it would extend it, or it comes off. But I do think Bitcoin probably does make a move in the next week or two.
That's a nice call.
I think 110,000 is a very unstable price for Bitcoin.
I agree.
Like just like going like, you know, let me check Deribit really quickly for vol. We'll see where it's trading. But basically, like if I go pull up the screen and it's trading anywhere below 55,
Buy some straddles.
I'm pretty, yeah, you know, or maybe sell some Bitcoin, buy some calls, right? Like I don't I also would never ever suggest trading on Deribit ever again. Now that IBIT has calls.
Mm-hmm. Yeah, why
but
would
yeah,
you?
look at this. Like vol's at 50 for the 115 strike. Oh, that's it. That's a 2-day, but still, yeah, vol's around 55. So it's actually
What's
maybe a
1
bit
month
shorter.
vol?
That's what I'm pulling up right now.
Okay.
Oh, 1 month vol is actually 1 month vol is really nice. 1 month vol is 46.5 for the 120 strike.
46, but basically, for those of you who don't really think like options traders, which is most people, 46% vol, the unit of that is the annualized standard deviation of daily return. So it basically tells you that a one standard dev annual move is going to be 46%. And it feels like a 46% move over the next 12 months is like kind of cheap to me. That's $46,000 a token. I think we'll probably get a bigger move than that, bigger amplitude over the course of that year. That you can monetize.
Another way to think about it, if you want to throw in a little bit of math, is you can take 46.5 and divide it by the square root of 365. And normally it's 250 something,
252 for a weekday asset. 365
for a
crypto.
weekday asset, but 365 for crypto.
Yeah.
So you divide it by the square root of 365 because crypto trades 365 days a year, and you get an implied daily move of 2.4%, which has been, I think that's actually very low because I think we're going to see, I would guess that we have a 10% day.
Yeah.
Like maybe a 5% to 10% day in the next week, because this is a very unstable price. I mean, my gun to my head, it's up. Gun to my head, we're at 120 like reasonably quickly. But I'm not in the business of punting Bitcoin short anymore. I'm stepping back from that game, focusing now on the investment side, because I think we're in an amazing environment for that over the next few months.
This episode is brought to you by Kraken OTC, one of crypto's longest running exchanges with over a decade of experience. With Kraken OTC, high net worth individuals and institutional clients get white glove 24/7 trading services for orders over $50,000. You can trade over chat or even access Kraken's self-service automated trading feature to receive executable quotes in seconds. With access to Kraken's fully personalized service, you can guarantee a secure trading experience with deep liquidity and competitive execution. To get in touch, click the link in the show notes or head on over to kraken.com/blockworks. Availability of products may vary by jurisdiction. See legal disclosures for each jurisdiction at kraken.com/legal/disclosures. Crypto trading involves risk of loss and is offered to customers through Payward Interactive. WalletConnect is the connectivity network shaping the future of on-chain UX. If you've connected to a Web3 app, you've seen WalletConnect, an icon of trust in crypto, as recognizable as Visa at checkout. From DeFi to NFTs, swaps to staking, WalletConnect is the backbone of connectivity in the on-chain economy, seamlessly bridging wallets, apps, and blockchains. Over 250 million connections and 40 million users worldwide have trusted WalletConnect. And now, with the launch of the WalletConnect token, the network is taking the next step, paving the way for a fully decentralized, permissionless, and community-owned future of connectivity. Want to learn more? Follow at WalletConnect on X and Telegram, or visit walletconnect.network to stay ahead of what's next. As always, investments in blockchain technology involve risk, terms, and conditions apply.
Yeah, we don't want to. I mean, you mentioned so much in that little statement right there to unpack. I agree that now is not the time to miss the forest for the trees and try to like short Bitcoin, trying to pick up an extra 3K a token on some sort of like projected pullback. Like this, it feels like we're about to go parabolic. The setup is a 10 out of 10, but the hype and froth is like a 3 out of 10, which is usually the the kind of backdrop you want to see for a big rally, especially as people we'll get to macro. Basically, you touched on a few things in your you touched on altcoin speculation, you touched on macro, and you touched on options. So let's start with altcoin speculation. It's in the spirit of this podcast, trying to offer concrete, actionable things you can do to attempt to make money for yourself. Just once a day, go to DeFiLlama.com and sort by 7-day revenue and just see which projects are in the top 20. And anything below a billion FDV on there that seems to be consistently earning money. I mentioned Launchcoin last time. That's dropped off a little bit. Now I see things like Bloom Trading Bot, Photon, things that I've never really paid attention to before. Zebu, worth just, that's a good place to monitor altcoins that are starting to look like real businesses, right? We can all find tokens that do nothing, but finding tokens that earn money, it's very easy in this platform to go and suss those out. And if they're cheap, this is certainly a fertile environment to buy, low delta call options on crypto via these projects. Most of them won't pan out, but the ones that do, you could hit it pretty big here. I think the next interesting kind of opportunity in crypto is to think about, like you mentioned, macro, Avi. Again, the thesis that we discuss over and over on this podcast, that no politician has the mandate to crash the economy, and they're always going to pump it whenever things start to look shaky. Trump is behaving exactly according to that hypothesis. The spending bill that just got passed enshrines exactly 0% of the Doge cuts, right? So it's just becoming ever clearer that Congress has no incentive or mandate or political will to implement austerity unless they're forced to, right? And the only thing that can force Congress to implement austerity is the market. So bonds are getting taken to the woodshed. Crypto in this backdrop, crypto is outperforming equities, which tells you something very important. It tells you that we're going to be like cutting taxes, basically cutting government revenues, increasing government spending, debasing our currency, printing more cash, borrowing more money at higher rates. Like we're just entering a debt spiral. And Bitcoin was literally, like, in the white paper, invented to protect your portfolio from this. And it's finally differentiating itself from equities because investors are realizing this. So like as a macro portfolio hedge, Bitcoin has never looked better. That's probably why you're seeing serious, air quotes, serious investors and companies start to accumulate bags. This is not going to stop. This is basically a demand-driven super cycle for Bitcoin that will sort of lead everything else. And then finally, just to touch on options, like we say, you don't want to buy options unless you expect the market to move fast. I personally expect the market to move pretty quickly here. I think we could get a nice pop. I think that one of the reasons why the market should move quickly at this point is because I'm trying to picture who would sell it here. And if you look at most of the on-chain metrics like coin days destroyed, MVRVZ, like we're not, like current prices, 110K sounds expensive relative to, if you've been in crypto for a while, or if you're a, sort of like a middle-aged human like me. You remember when crypto was trading like $100 a token or $1,000 a token. $110,000 a token sounds expensive, but what really matters is like where is the average level at which Bitcoin has been spent by the entire world, right? And it's not like participants are kind of in the money, but not like so wildly in the money that they're just going to be selling with both hands to try and change their lives. Like even Saylor's average price is probably what, like 85, 90 now? I don't know off the top of my head, but he's pretty indicative of the rest of the space. And you can, if you subscribe to Glassnode, or even if you don't, you can get these metrics for free if you hunt around on Google. Like like people are like up 20% ish, maybe 10. It's not a level where participants are going to start like unloading to take profits. Maybe 150 is where that happens. I don't know. What do you think?
I mean, it's kind of kind of tough to say, to be completely honest. What I'll say is that there's been so much activity around Bitcoin, and there's been so much interest from people that we never thought in a million years would be interested in Bitcoin, that have extremely deep pockets, that I think that Bitcoin could, once it sort of reprices to what I believe is, fair-ish value, which is 150 to 200K, maybe we see some profit taking. But I think that what we actually just see is we see volatility die down in Bitcoin as it becomes more of a stock market like asset that people are just allocating to over time. I do think we're kind of like it's across the Rubicon moment. We tried to sell off. We tried to collapse with equities. It didn't happen. Now we're back above all-time highs. Equities have still not reclaimed their all-time highs, and people are starting to realize Trump is in power for 4 years. He has repeatedly done things that are good for Bitcoin. Maybe we should stop fighting that trend. And so we can talk about profit taking, but I do think that also hopefully market participants are smarter today, than they were 3 years ago. 3 years ago, what would consistently happen is that everyone would buy the top. Like all of retail would come in and they would just FOMO buy and destroy any semblance of normalcy in the market. Like Bitcoin would just double in the span of a month because everyone was FOMOing in, and then Bitcoin would collapse 50% because everyone would FOMO out at the same time. The people that own Bitcoin today just don't do that, right?
Yeah.
These are
Smarter
more
people.
Sophisticated. Yeah, these are maybe not smarter, maybe just less emotional. So is what I'll say. I don't want to disparage anybody.
Yeah,
who was retail in 2017, but it's these are less emotional people, and so I think you can be very happy sitting in Bitcoin just waiting, and you can get those allocations to come on. Now, where I do think this dynamic still plays out is in the alt space. I mean, you have to be very careful if your project triples and it hasn't caught up in terms of actual fundamentals, then maybe it's time to sell a little bit. I think you need to be a lot more aggressive selling altcoins than you do Bitcoin, because none of these things are supported by the broader markets in the same way. Just my 2 cents. I'm definitely becoming less of a trader of Bitcoin over time, just because like I just want to play at the extremes, right? Like when things are really collapsing, I'll buy, and when things like if we get, if we're trading $250,000 in 3 months, yeah, okay, I'll take some off. But kind of between that, I don't really see much reason to move.
Yeah, me neither. I mean, crypto is like if you think about what it is at its core, it is an engine for incentivizing communities to align towards a common goal, right? It's a community engagement and incentivization engine. And the way that works out is, like at a very simple, stupid level, like, imagine some guys start a crypto project or gals and they distribute some tokens to stakeholders. And then that particular group of stakeholders and founders will, kind of be aligned in attempting to do things that make the number go up, right? At a macro level, Bitcoin does the exact same thing. It was created, and at first it was a bunch of like dark, anon, online anarchists. But as the community grew, now you have involved in that community Michael Saylor, the president of the United States, you and me. We're all kind of we believe in this thing, and we believe in the role that it plays in the macro economy, keeping central banks honest, preserving wealth, potentially facilitating larger global trade transactions. And so we talk about that. All of us do. You, me, Donald Trump, the random guy on the street who owns Bitcoin. And the people that are coming in now are not the retail degens that were FOMOing into the highs in 2017, for sure. They're more like people that were probably pretty skeptical of Bitcoin over the last few cycles. And they're starting to say like, hey, I now, the volatility has come down to a level where I'm comfortable with it. That used to be a deal breaker for me, and it's no longer a feature. That, Bitcoin's not a 200 vol asset anymore. It's a 40 vol asset on a bad day, 20 vol asset on a good day. And okay, so I'm not worried about the volatility anymore. It does seem like a decent store of value. I understand the macro argument. These are the people that are coming in. Somebody who's, got a lot of money and their Morgan Stanley private wealth advisor recommends IBIT as 1% of their portfolio. Like that's the new retail, right? These people are, we could call them more sophisticated. We could call them less degenerate. Maybe the better way to describe them is it's a more sanguine investor class, right? They're not going to FOMO panic into Bitcoin on the highs. They're more just going to sort of dollar cost average over time. So I think it's steadier, longer term cash that's coming in right now. And you're seeing that in the numbers. You're seeing that in the far side ETF sort of inflows. I think it's basically a safer group of people a safer herd to be part of, as opposed to previous herds. Now, altcoins are still degen land. I just think that, if you have real businesses buying back their own tokens with real revenues, that's like, that's a herd you want to run with as well, especially if the FTV is low. And I think that if you manage not to get shaken out of those trades over the course of a cycle, this cycle, I think, will last another 10 years. It's not going to, I think we've broken the 4-year cycle rule. By the end of this cycle, there will be ways to 1000x your net worth in crypto if you maintain the right balance of Bitcoin and, cycling through altcoins that start off cheap and then, you sell them when degens FOMO into them.
This episode is brought to you by Kraken OTC, one of crypto's longest running exchanges with over a decade of experience. With Kraken OTC, high net worth individuals and institutional clients get white glove 24/7 trading services for orders over $50,000. You can trade over chat or even access Kraken's self-service automated trading feature to receive executable quotes in seconds. With access to Kraken's fully personalized service, you can guarantee a secure trading experience with deep liquidity and competitive execution. To get in touch, click the link in the show notes or head on over to kraken.com/blockworks. Availability of products may vary by jurisdiction. See legal disclosures for each jurisdiction at kraken.com/legal/disclosures. Crypto trading involves risk of loss and is offered to customers through Payward Interactive. WalletConnect is the connectivity network shaping the future of on-chain UX. If you've connected to a Web3 app, you've seen WalletConnect, an icon of trust in crypto, as recognizable as Visa at checkout. From DeFi to NFTs, swaps to staking, WalletConnect is the backbone of connectivity in the on-chain economy, seamlessly bridging wallets, apps, and blockchains. Over 250 million connections and 40 million users worldwide have trusted WalletConnect. And now, with the launch of the WalletConnect token, the network is taking the next step, paving the way for a fully decentralized, permissionless, and community-owned future of connectivity. Want to learn more? Follow at WalletConnect on X and Telegram, or visit walletconnect.network to stay ahead of what's next. As always, investments in blockchain technology involve risk, terms, and conditions apply.
Should we talk about ETH? ETH has been outperforming, and we've kind of just ignored it because both of us sort of hate it. Is there anything to say there? I don't have a view right now.
I mean, outperforming for sure, but really the outperformance has been, it was 1 week, right? The outperformance was really 1 week in the beginning of May 5th to May 12th. And ever since then, it's kind of just been like chopping around against Bitcoin. But what I will say is, look, as a trader, the chart looks good. It looks all right. Like if you look at it, it's really bottomed out. It's
which chart? ETH BTC or just
ETH
ETUSD?
BTC for like the first time in many, many, many months, and basically for the first time, in 3 years. I'm just taking a look at the weekly chart. It sort of recovered a level of previous breakdown, which to me suggests, look, people might think it's very good RR here, and I don't think that's wrong, right? Like I don't think it's necessarily a wrong view to say, okay, well, it's gone down so much that it might be extremely good risk reward to punt it against Bitcoin. There's an easy stop out level. I'll stop out 20% below. I'm looking for it to rally 100% against BTC. It's just not a trade that I would take. And it's not a trade that I would take because I'm still seeing zero signs of ETH being able to deliver on anything. I mean, look, yeah, L2s are actually showing promise. Like Base is doing well. Just to go back to virtuals for a second, they're doing very well on Base right now. They're generating activity. They're bringing money to Base right now because of this new Genesis launchpad that they've done, which is kind of like they kind of leaned in exactly to what you said, Jonah. Right? They said, okay, well we're now focusing on being a launchpad, and if you launch with us, then you get access to all the other launches, right? So it's kind of like this. Come on,
You have to give the team credit. They do pivot well.
That's what I'm saying. Like, yeah, they did a good job pivoting. Which, by the way, we need to check because apparently we have like a substantial amount of points. That
we got a lot of
pledge.
Points, and we have like my Phantom wallet for things linked to virtuals is like unusable. It's a gazillion coins.
You mean okay. I guess you use Phantom. I use MetaMask, but that's fair.
You use MetaMask?
We need to,
Who's the boomer now, Avi?
Yeah, fuck. But yeah, we have a decent amount of these points. You should probably figure out what to do with them. If anyone on the virtual team is listening to this, let me know. But back to the main point. ETH is held up, right? Like ETH held up, and so people are kind of taking it as a trade, but they haven't solved any of the core issues. So I'm still, I'm not really in short mode right now. I just don't think that's necessarily, it's not necessarily the right time to be in short mode, except for WorldCoin, which, I got squeezed on a little bit, but guys, it's going lower. I don't know what to tell you. This is going lower. Just don't get blown out. Don't get blown out on it, but I'm pretty confident in that one.
Oh, but Sam Altman, he's so important. You're going to want to scan your eyeballs. No, I don't buy it. It's going lower.
Yes, you may in fact want to scan your eyeballs, and you may in fact buy an orb, and you may in fact do all of these things. But the issue is, if you go to WorldCoin, and you go to the fully diluted valuation of this thing, it's 14 billion, and the market cap is currently 2, and emissions are happening. You really think there are billions and billions and billions and billions of dollars coming in to go buy your WorldCoin bags? I mean, good enough for a squeeze, but it's going to get sold into. Anyway, I'm still not confident on ETH. One thing that's been a bit of a disappointment has been Berachain. There hasn't, I haven't really seen much uptake there. And as an investor, I don't want to talk. I'm not talking badly about it. I'm just saying it's been disappointing. Are
they going to start pivoting like virtuals? Are they going to?
I don't know. I have to call them and get up to date on their latest plans. I actually don't know, but it has been, it's been sad. It's been a little disappointing to see.
Well, I mean, yeah, now's the time with these types of projects when either they start ducking and weaving and trying to like come up with new use cases and product market fit, or they do nothing, which is obviously a sell. Or they do like kind of what Friend Tech did, which is like points, airdrop, just like kind of like running on fumes, and then they die. So let's see. Hopefully Berachain looks for some value and redirects the heading a little bit towards that value. Well, I don't know much about that ecosystem. I'm more focused on just whatever's generating revenue on the DeFi Llama revenue dashboard, because that's the only objective framework that I can cling to right now for altcoin investing. And as far as like what you said earlier about, ETH being up, but you not believing in it and not participating, I think that's a good reminder to everybody that in things like Barachain, Tau, ETH, like there may be money to be made, but it's okay if you aren't making it. Like there's just too much to focus on in crypto. You kind of have to direct your attention towards something that makes sense.
Yeah, look, Jonah's spot on. You have to pick your battles. That's what it is at the end of the day, and you have to focus on the things that that really matter, which are the things that you have edge in. And if you feel like you don't have edge in a particular area, that's okay. You can try to generate it. Obviously, you can try to listen to this podcast, and hopefully, we'll be able to give you some direction on how to look at specific things. But the goal is for you to focus on where you have edge.
Yep. We should talk about a couple other things too. Speaking of focusing on where you have edge, I've noticed a lot of people focusing on this James Wynn guy and his extreme leverage. And I think that it's interesting, not because, I think that it's interesting that crypto Twitter is so fixated on it. Obviously the fastest way to get followers and attention and engagement is to post like huge P&L screenshots, which is what he's been doing. But I think the interesting lesson here is how distracted I see the community getting with this guy's leveraged bets. Like, countless examples in my TradFi trading career of like me and everybody else just being humans, succumbing to human nature, getting fixated on some other person's losses or gains. And, oh my God, did you hear about this guy? He's up $1 billion this year. What's he going to get? Oh my God, he's going to get paid $160 million. He lives in, Dubai. Wow. Oh, just like what do you make it on? Gas, oil, diesel. You get focused on other people's P&L. Oh, did you hear that, this guy that used to be like, my first year analyst bought a $17 million mansion in Coral Gables. Like the community is always talking about like somebody else's profits. And what I've noticed is that when you get focused on other people's money, counting other people's money, you lose sight of the ball being like where the market is going, what actually matters. And so when I see crypto, like one of the few worrisome signs that I see right now out there is everybody just being completely obsessed with one dude's hyper degen, like clearly zero process approach to trading. He's probably a good trader. He's probably got a good gut feel for things, but like, and I'm not throwing any shade here. I'm just saying whoever's watching what he's doing and trying to replicate it to earn money for themselves is going to lose all of their money. It's like you can't copy trade somebody like that. And you can't focus on somebody's P&L because then that attention is not being directed towards the opportunity,
I don't think I could have said it any better than you, Jonah. I mean, pocket watching has always been a thing in crypto. Pocket watching has always been a thing in crypto because there are people that make absurd amounts of money extremely quickly, and it's a natural human feeling to get jealous and to say, "Oh man, like I could have done that. This guy's not smarter than me. I could figure this out too." But it's really corrosive to both your P&L and your mentality, short term and very much so long term, because what it forces your brain to do is it forces your brain to look for quick opportunities to make money, because everyone wants to catch up. Like everyone wants to be that guy and catch up and brag to their friends, and just don't let that happen. Focus on beating yourself. Don't focus on beating other people in this market or watching their pockets, because I do think that level of jealousy or oh man, like what's going on can be very harmful to most people. Obviously, there's some people out there, like a lot of the top hedge fund guys I know, they like can't fucking stand it if somebody else makes more money than them that year, and it does drive them. So there's some people that can handle it, but you're likely not one of them.
Yeah, I'm not. I mean, you're probably not. I mean, look, competition is good, right? Wanting to win is good in a general sense, but being upset about somebody else's returns, unless like where I've seen it work is in actual business, right? Where like, Ken Griffin is notorious for this. He'll like he'll get enraged that his physical gas team is underperforming Trafigura's physical gas team. And so he will poach people from Trafigura and try to like develop either parallel or superior intellectual property within his organization. And he is motivated by the fact that he underperformed a group in an asset class where he believes there's opportunity. So like if you're Ken Griffin and you're trading people and trading IP, you can certainly like notice where pockets of money are and attempt to gravitate towards it. But if we're all just sort of in this like, I don't know whether you call it player versus player or player versus environment mode in crypto, where you're just sort of like individually investing or institutionally investing in crypto, unless it's like, okay, right, like my mid-frequency strategy is underperforming what Tower just did last year, so I need to like do better and figure out what they're doing, unless it's like a directed effort like that. I think it's the road to ruin. For example, if I'm saying like, oh wow, this James Wynn guy went 20x levered $1 billion worth of Bitcoin at 100K, and he took profit at 106K and made a lot of money, maybe I should have done that too. That's not going to work, is my point. So yeah, let the don't let other people outwork you, to quote our boy Ansem, and like work harder than people, but work harder on what matters, not on like focusing on P&L screenshots and trying to get in and out at the same level as like somebody who like, you don't even know how much they're making, right? You never do. I guess you're on mute.
So that's a good, don't let people outwork you, but
yeah,
focus on your own work at the end of the day.
Earlier in today's episode, I mentioned Ledger's latest products, the Stacks and Flex, and I wanted to take a few seconds to tell you more about them. These wallets feature the world's first secure touchscreens, which don't just simplify your digital transactions, but also keep them extremely safe. These wallets are virtually impenetrable to online attacks because they store your private key in a secure offline chip. You can manage more than 5,500 tokens and install up to 100 apps. Choose the most trusted name in hardware wallets and take control of your digital security today at ledger.com, or hit the link in the description of today's episode to check out their latest wallets. As always, investments in blockchain technology involve risk, terms, and conditions apply.
There was one thing also that I wanted to talk about, kind of unrelated. I know I'm jumping around here, Avi, but like on previous episodes, we didn't have a chance to talk about the Coinbase hack. I don't think I would touch Coinbase anymore. Like they gate your money, they lose your details. Like, am I freaking out too much? Is Coinbase still a legitimate platform in crypto? Is their stock price overvalued now? I'm really skeptical of a platform that will just like make it so hard for you. Like there's supposed to be a gateway basically, and I guess an exchange. But as a retail investor, is Coinbase worth touching now? It's so hard. Heard a million stories of people losing their funds, now losing their personal data, doxed. What are we doing about this? I don't want to touch it.
It's hard to say because there are two potential things that are happening right now. It's one, Coinbase is really horrible and Coinbase really messed up and they built a really bad product and nobody should use them. Or two, they're just the first ones to come out and admit this, and that everyone has had these issues. Because crypto is really hard. Crypto is very hard. What I do think is true is that Coinbase has tried historically to do too much and spread themselves very thin, and they've gotten bloated in a way like some people. And I'm not just saying this because we're sponsored by them, but our sponsor Kraken has done. I think they've done a good job being focused and not bloating themselves up too much. And I think Coinbase is a victim of its own success in some capacity, because also, I don't want to go too hard on Coinbase because a lot of this was social engineering and phishing, and that is very difficult to protect against. That's basically like your first line of defense is the user of the platform, and if they're stupid, there's actually only nobody's hiring 125 IQ customer support people, 130 IQ customer support people. If you're dealing with like a career criminal who's 130 IQ and knows exactly what to say to trick people, it's like, can I really blame the customer support people, or should I blame the person that didn't secure their account properly? So I will, there's a little bit of that. What I didn't like is their response, and basically like how it all came out and how they sort of knew this was going on, and it's just not really, doesn't leave a good taste in my mouth. That's why you always, as safe as any exchange could be, you always have to hold some Bitcoin on a ledger, just offline. You need offline Bitcoin. I think that's number one. And number two is also Robinhood's looking pretty damn good. Robinhood's probably sitting there going, okay, this is nice. This is good for us.
That's a good take. I mean, it's like bullish Robinhood, bullish Kraken, bullish Hyperliquid. If this stuff can happen to Coinbase, it can happen to anybody. So, I actually think it's a decent argument for Hyperliquid, like for just, all self-custody, decentralized, like, yeah, you could get hacked, but Coinbase can get hacked too. So what's the advantage of using Coinbase? At least Hyperliquid won't gate your funds. Their customer service is probably just as terrible, and whatever. I think that I think your point about maintaining Bitcoin on a ledger or another cold wallet is really worth underlining. That is something I think is of increasing importance in this increasingly volatile, online, dangerous world. It makes it harder to trade actively when you have to like click buttons and plug USB sticks into computers or laptops or Bluetooth your way in and out of crypto. That's probably a good thing at this phase. Like, it's probably good to enforce some discipline, avoid over trading, and air gap your assets just in case, the next exchange hacker or rogue AI fucking Skynet thing decides to just start appropriating everybody's value, like an air gap. I think, that's probably I'm kind of happy with that take, actually. Like, in an era where AI is starting to go rogue and you're seeing like horror stories come out of Anthropic about models, that are getting discontinued, like threatening to go to the command line to like escape into the ether. Like, as this like weird tail risk emerges, I think the value of an air gap goes parabolic. So yeah, keep your dough offline in a physical safe somewhere.
I think that's a good horror note to end on, Jonah. Don't let him get you. Don't let the AI get you. Keep yourself safe.
Stay safe out there, everybody. Right. Great seeing you, man.
Great talking to you, as always.
Likewise. All right, until next week.
See ya.
Nothing said on the 1000X podcast is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed.